Hey Bulls, love y'all. Back, the Sherpa back again. Got the game plan. The game plan today, we're gonna have a straddle on PLTR, Palantir again. We're gonna have a mega buy on LAC. We're gonna flip ERX back into the RIOT short, and I'm gonna tell you why. And I've got some options on your TLT trade. So let's get into it, guys. Okay, just straight up. Let's take a look at the news. Funny enough, we're seeing some green. We have the S&P, we got the Dow, we got the Nasdaq, and the Russell all up. 3 days before or after that is, Fed raises interest rates by 75 bips. We got crude going up, which makes sense, and we're going to capitalize on that one. But we have the big news. I've been in shock. Letters reveal financial distress for Celsius, Voyager bankruptcies. We have whatever you're feeling about stocks. It's normal bear market grief. We've got the lotto over here and all the people that don't understand statistics and quant methods buying tickets. But I don't hate on it, man. If you don't buy one, you can't win. And then we have some, interesting. What if the Fed messes up? Well, my opinion is that they did. I have some notable yields and commodities here. This is going to basically structure the entire discussion around. I'm just updating as I go here around what my hypothesis is, and how we're going to win this. But so let's think what happened here. We had the 10-year bond at 2.64% at the end of the day on Friday, which was down. But we had the Fed announce interest rates in the Fed funds rate moving up by 75 bips. That doesn't make sense. I'm not saying that to defend the TLT trade. We're all in the same boat. They're down 80%. I believe that's going to come back. I still believe that's going to cash, but I'm going to provide some options here at the end for you. But what happens when interest rates drop, especially on the 10-year Treasury? Let's forget that they're supposed to be going up. But when they drop, typically that strengthens the dollar, particularly in relation to other currencies. Okay, what happens when that happens? Commodity prices go up. Crude oil has gone up, at least on Friday it had. Real quick, some notable observations here. Consumer discretionary, consumer information technology, industrials and energy, all up the most over the 1 month. Consumer discretionary, that's items that you don't need, like Louis Vuitton stock. That's items like, luxury vacations. And then we have information technology, which is big tech, which we all know. Now, those are bouncing up. Great. Probably a little bit of a bounce, probably not a rally. But we still have energy staging a comeback too. And then healthcare, funny enough, consumer staples, which are the defensive stocks, are going down again, while the White House is calling inflation transitory or recession's not real, all of this stuff. So I feel like a lot of the dumb money is jumping back into the market a little early. I'm not ready to do that necessarily yet. If we look at the 3-month, we still have IT up 1%, which is pretty wild. We have energy up 4%, and then financials, consumer stable, real estate staples still down. So it's kind of like this is hollowing out. It's kind of like this is bottoming out. I am not falling for it. I'm not letting my subscribers fall for it. And then we had the 1 day, which again, staples at the bottom. Even though it's a Friday, don't fall in love on a Friday, still doesn't make any sense. So I'm not allowing the recent sector performance, other than energy basically being a leader for the entire year. I'm not going to really let that get me. And then we got cryptos too, right? So, we took an L on the RIOT trade, but we put that L into ERX. I don't know about y'all, but I ended up making about 40% on that trade and then bailing. So that money is still in transit or in settlement right now. On Monday, I'm going to fire away back on short RIOT. So this was a nice way to still get a bump bigger than we would have if we had RIOT. This is the reason that making, your chess pieces move a little early sometimes work, particularly on taking L's. So hopefully that was a good lesson for everybody. And then we have Bitcoin, sitting right here, 23.733, and Ethereum still under 2,000. So my hypothesis is that this recent news of crypto firms is just a massive blow to the coins. The demand curve for all cryptos should basically be scaring away the needed institutional investors and conservative, older, get off my lawn type sideline money that is really retired. So I'm sorry, that is really required here. So interesting article. JP Morgan says that this is a Lehman Brothers moment for the crypto industry. I happen to agree. So that's the main reason that I'm telling you guys we're going to get back into those riots. We're going to get back into the 19s. I believe y'all probably had the sevens. I had the sixes and the sevens. And we're going to buy the put for 73 cents. I'm going to probably do this on Monday. I like to trade on Tuesdays. If riot's up, I'm going to wait. And I'm just going to scatter this in some of the other trades. I have some IRA trades for you too. The TLT trade, I know we're all in this one together from an economic perspective. I'm just frankly shocked that it hasn't paid off. We have several options on how to hedge or wait for returns. My personal strategy is that I'm going to sit still and I'm going to wait just to see how this next week, pays off. I think that we could have at least a 10% drop, which is roughly what we need. TLT is at $1.18 right now. 10% would be 11 points. That drop it back down to 9, and I think 109, and I think that that's completely reasonable. So you can always text me, you can always call me. The options are that you can buy back to hedge. You can buy the opposite to hedge. You can even buy the inverse, but if you wanted to hedge this one, we just do what we did with SOXL and SOXX. That is a couple weeks back. You can also put a time value spread, which means go shorter on the same side of the position, kind of double down. You can try to retrieve some gain, but my reasoning is this. This is called backwardation. We got 3 months. So you give your money to me for 3 months, I give you 2.5 back. You give it to me for 2 years, I give you 2.89 back. You give it to me for 3 years, I give you 2.82 back. That doesn't make sense. So you give your money to me and I pay you less interest over an entire year longer. And then watch what happens at 5 years. It goes down even more. And then watch what happens at 10 years. It goes down even more. So you can put your money away for 3 months right now and you put $1 million and you get 25,800. Or you can put $1 million and I give you 2650. And the difference is holding it for 9 years and 9 extra months. This is where the efficiency in the yield curve comes on. So this is the steepening of the yield curve. This is actually the inversion of the yield curve. Now, the Fed, when that earlier thing we read said, what happens if the Fed is wrong? The Fed never wants this to happen. This is the worst thing that can happen to the Fed. This is going to put people into shorter term notes, treasuries, bonds, CDs, and this is going to abandon that which the country is built on, which is longer term bonds. So I think this is going to reverberate and the inversion in the yield curve is going to at least flatten. I actually think it's going to turn positive. And that's the reason I've been betting on the TLT trades. And so far we've been doing well. Remember, we got gaslit by the White House. This is not a recession. Interest rates are not out of control. Inflation is not happening. It's like, guys, look at the fucking numbers. So that's where I sit. This isn't ego talking. This is years of experience talking. But, basically the Fed is going to have to come out with some hawkish news. And if they don't, this won't change. So essentially what I'm telling you guys here is that I'm still in the puts on TLT, and I actually still will hold them at least 2 more weeks, which is going to put us right up against the edge. But that's the economics of it. I believe there will be a revision to the mean. I do believe that the way economics work will prevail here, and that this is a lot of dumb money, a lot of kind of like look over here and then a little slap across the face, and these sucker punches won't last long. Mega buys. So all my bulls out there, I'm doing this in an IRA. I'm going to buy some more CDEV, which is Centennial Resource Development, which is the natural gas and oil company based in Texas that is doing basically wildcatting, very profitable. They make money when the barrel of oil is at like $33 or something crazy like that. They're micro caps, so they're not going to be overly diversified and be wasting money on downstream. And they just basically, this is a buy for me. I'm going to put this in my IRA, and I'm probably just going to buy some just to eke out, a 3 to 5% gain in my trading account with some of the cash that I have sitting there. This is a great dipper. If you want to do a dip trade on this and just throw a ton in it and then hold it for, half a week, 1 day, and then swing trades. And then the major one is LAC, which is Lithium Americas Corporation. This is still my favorite stock right now. What's happening is that I mentioned before that when yields drop, the dollar strengthens. When the dollar strengthens, commodities are way overpriced, right? Because it's going to take more dollars to buy the same yield, to buy the same commodity. in relation to other currencies. So that is a perfect storm for why Lithium Americas Corporation, which is a lithium miner, which is what they make batteries out of. And not only do they make batteries out of lithium, but lithium hydroxide is what these guys mine. And they do it in the most ethical way, which is going to provide more companies wanting to buy it. You can look at the chart there. I think this hits 50 bucks at some point this year still. I'm not against that. And then so just LAC, you can throw a call on this. I'd still like that. Maybe like a month and a half out, 2 month out call. You can even buy this, a couple of weeks if you want to, but these are straight commodities plays. And that's what you do right now when the market's acting wild, is just at least try to get some economics behind you. Then best bet is Palantir. We made money on this one twice already. Look at this chart. This chart's providing a based out 2 month long, 3 month long uptrend. We're getting just enough kind of these ups and downs, these whipsaws in the middle to where we're going to profit on both sides of this trade. If you want to go back, if you want to subscribe, if you're not a subscriber, you can go back and read my previous posts. It is titled Palantir Straddle, maybe 3 months ago, 2 months ago. It'll just be on the main list there. But you can show that, on that one, we cashed on both sides. It's pretty heavy. I think probably 20 to 30% on both sides, if I remember correctly. On this one, I do want you to go just a hair outside the money on price. And then you just buy the put and you buy the call. And then you'll profit on both of those every single time that we have. Here in 3 weeks, we had ups and downs and ups and downs and ups and downs, and we're kind of back in the middle. So in up, you cash the call, you wait for the put. And then in a down, you cash the put, you wait for the call. And this has just enough volatility to give us some money. And also, biotech and tech have been kind of wild rides. They've been trading opposite each other, which is very rare. So I just like that on both sides. And what I've shown here is the September 16s. Yeah, and remember that for the timing of my trades, I'm doing the best out of anybody in the market. I am certain. Ask my subscribers. I follow back with everybody. If you text me, I text back immediately. Ask one of my subscribers. My entire idea here is a goal, just stated clear goal, is to be the number one Substack on the topic of trading in the entire world. I'm number 5 right now. My history is better than anybody. My experience is better than anybody. I'm frankly kind of shocked that this hasn't taken off more. So for 20 bucks a month, you get the Sherpa and you get me in your ear and you get the timing of all my trades. So get with it, sign up, AFG, LFG, LGR, love y'all. And don't forget the Sherpa's list is coming this week, but you got to subscribe to the Substack to get it. That's the best 50 stocks in the market right now and the reasons why. And I break it down in a short, concise 15-minute video. So get on it, bulls. Love y'all.